Hello, today is Sunday, May 31st, 2026. Here is your daily signal. According to Business Insider, Ukraine's new mid-range strike drones are rapidly transforming once safe Russian rear areas into dangerous kill zones, causing both practical and psychological problems for Russian forces. Since 2022, drones have evolved from simple reconnaissance tools to precision strike weapons, with both Russia and Ukraine accelerating innovations in swarming tactics and electronic warfare. Ukraine's drone strategy is credited with shifting battlefield dynamics and successfully targeting key Russian positions previously believed to be immune from attack, while Russia has responded by deploying swarms of cheap drones and adapting Iranian-supplied Shahed drones for dynamic missions. On May 29, 2026, Russian forces were struck by waves of mid-range Ukrainian drones, highlighting a new phase of combat where even single soldiers are targeted by up to 15 Russian drones, demonstrating a significant change in tactics. Russia is also converting more Shahed drones for operator-guided missions to hunt moving targets and outfitting attack drones with new electronic defenses to counter Ukrainian interceptors. Fortune reports Russian war costs are surging, with GDP growth expected to slow to just 0.4% this year, as drone-driven attrition sends Putin's forces reeling. The near-term consequence is rising Russian military losses and increased disruptions, especially as Ukraine's drones target logistics and command centers in rear areas, escalating risks for civilians and infrastructure. Economically, Russia faces intensifying strain, growing budget deficits, and mounting pressure to escalate its own drone and electronic warfare capabilities, further fueling a high-tech arms race that is likely to spread beyond the battlefield. Next, onto recent investment trends shaped by geopolitical events, including Iran war and U.S.-Iran peace prospects. As reported by Business Insider, Barclays forecasts a potential rally in consumer and defense stocks driven by a short squeeze once the U.S. and Iran finalize a peace deal, signaling a dramatic reversal for previously battered sectors. The Iran war's escalation early in 2026 pushed investors to safer assets and heightened volatility in defense, consumer, and emerging market sectors. Recent U.S.-Iran peace talks have shifted capital flows as investors anticipate post-war recovery, while record lows in the Indian rupee have made currency exposure a major concern. Indian companies like towel and dairy producers now face increased investor scrutiny with the rupee's depreciation, as Bloomberg noted on May 29, 2026. Meanwhile, Bloomberg reports SpaceX's anticipated IPO is fueling a crypto shadow market for pre-listing bets via perpetual futures contracts, while Fortune describes skepticism from analyst David Traynor, who calls SpaceX's $1.75 trillion valuation mathematically indefensible. U.S. military contractors such as Raytheon and Lockheed Martin are contending with supply chain bottlenecks and weapons replenishment timelines stretching years due to heavy deployment during the Iran conflict. In the near term, sectors affected by the Iran war may see sharp rallies if peace is formalized, led by short squeeze dynamics. SpaceX IPO hype could invite tighter regulatory scrutiny on pre-IPO trading, and Indian firms may face higher financing costs and export challenges unless the rupee stabilizes. Over the medium term, U.S. defense supply chain constraints are expected to lengthen order fulfillment timelines and increase strategic stockpiling, while capital and investor sentiment toward SpaceX and emerging markets intensifies globally. Now, let's explore the critical implications of quantum computing for cryptocurrency security. New Scientist warns that advances in quantum computing threaten to destroy Bitcoin's encryption, potentially affecting even those without direct crypto holdings. As the hypothetical Q-day looms closer, quantum computers can solve cryptographic puzzles exponentially faster than classical machines, placing the elliptic curve algorithms underpinning cryptocurrencies like Bitcoin at severe risk. If quantum computers break current cryptographic protections, the billions of dollars locked in Bitcoin and other cryptocurrencies may instantly become vulnerable, with global repercussions. Satoshi Nakamoto's original cryptographic framework is now under pressure as institutions like NIST race to develop quantum-resistant standards, while leading quantum firms such as IBM and Google accelerate the timeline for scalable machines. In the near term, developers and exchanges such as Coinbase and Binance must rush to adopt quantum-resistant algorithms to defend against potential Q-day disruptions. Failure to adapt could trigger widespread financial losses, collapse trust in digital assets, and send shockwaves throughout broader financial markets. Sensitive financial records and retirement savings tied to crypto could also be compromised. Regulatory intervention may soon be required to mandate upgrade cycles for cryptography across the digital asset ecosystem, a move that could reshape the very foundations of digital finance globally. Now, onto the markets. International equities saw mixed performance, with Italy and Spain posting modest daily gains led by EWI and EWP, while Germany and France slipped slightly as EWG and EWQ moved down. Netherlands stood out with nearly 9.5% growth month-over-month, and China large cap, represented by FXI, declined for the month but edged up day-over-day. Commodities markets showed gold rising 1% on the day thanks to GLD, but U.S. oil, tracked by USO, dropped almost 13% month-over-month. Silver was steady for the day and up over 5% for the month, while natural gas advanced with UNG gaining 17.5% month-over-month. Top favorites included Adobe, surging over 7% on the day, and ARM, which soared 75% month-over-month. Meanwhile, Nvidia and Apple both registered slight declines day-over-day. Microsoft rallied over 5% daily and Moo jumped nearly 87% for the month. Sectors showed the S&P 500 climbing modestly, with finance moving higher on the day but healthcare and real estate declining. Semiconductor stocks, tracked by SOX, were nearly flat daily but up 26% for the month, while clean energy rose over 16% month-over-month despite a small daily dip. That's it for today. You can find more news and details on our website. Goodbye.